Welcome back to Dukascopy TV. I'm Elaine Stenson, and today I'm joined in studio by Bjorn Martenson, who's the finance manager with Black Pearl Capital. He's here with me today to discuss the oil industry. Bjorn, you're very welcome.
Good afternoon, Elaine. Pleasure to be here.
Great. Now, how would you describe the oil industry at the moment?
I think it's in a very strange place. You've got a great short-term market dynamic, 9% increase in prices in July. Crude is sitting futures at around $107 today. European markets in April and May was the first time that they saw an increase in demand. But at the same time, just over the last couple of days, there's been a lot of talk about peak oil demand over the long term. So I'm not sure where that places us.
What does it mean by peak oil demand?
Well, for the last 10 years, I think everyone's been concerned with peak oil supply. It's been a general topic that economists have discussed about how much oil is there out there, where can we find new oil, etc. And now, for the first time, a few statistics are coming out. For example, Citibank just released a study showing that they think peak oil demand, which is currently 89 million barrels per day, will only reach 92 million barrels per day and then begin to decline in the long term.
So if demand is going down for oil, how is this going to affect the oil industry?
Well, I think that as opposed to pre-financial crisis, where everyone was talking about $200 oil, and projects in Canada such as tar sand oil and the more difficult to find oil, we now have to look at what are the existing production facilities and how can we optimize those to continue producing what we have, but maybe because of the technological changes, we won't need as much oil in the future.
So does this mean that the price of oil is going to go down?
I'm not sure that the price will necessarily go down, but the cost of production will go up. So something that we look at Black Pearl Capital, and in fact we invested in this in 2009, is manufacturing equipment for optimizing oil well production. So we work with something called hydraulic workover units, which have the ability to come into an existing well operation, work on it while it's live, and optimize that well. Now, if I can produce at a well where I've already recovered my capital expenditure over the last 20 years, but I can increase my efficiency of that well and still get oil out at a good rate at $105 a barrel, I'm not too concerned about whether there's a 10% plus or minus fluctuation in the price in the near term.
Okay, and what are the reasons that there's a less of a demand for oil? What factors?
Basically, what's been mentioned so far is this technological shift, and another big factor is shale gas. So through the technology of fracking, gas is now becoming a major component in the US energy strategy for the long term. And on the other side, the first point I mentioned with technology is literally the auto industry. So we all dream of a world with electric cars and hovercraft cars, etc. But the actual proof of it is that the efficiency is getting there. In America, over the last 5 years, fuel use for motor vehicles is reduced by 1 million barrels per day.
So do you think for somebody who's looking to go into the oil industry as a career, is it a good idea at the moment or not?
Well, absolutely. I mean, the asset that we own is called Canadian Energy Equipment Manufacturing. It's a manufacturing firm in the United Arab Emirates. We have 180 employees there at the moment, and we're increasing that by 40% over the next 6 months. So by the end of the year, we're looking to have 250 employees. All of those will be engineers, technical people. Really, if you're looking at the European situation now, the young workforce is mobile, but everybody's talking about Facebook and apps and digital and all of this. Good old-fashioned engineering, manufacturing jobs. If young people qualify themselves in this, they have a great future for it.
Okay, but if the oil industry, if demand is going down for oil, it doesn't make sense that there's going to be more.
well, what we're saying is that it's not talking about necessarily demand going down. It's saying we're going to reach a certain peak and we're going to level out. So in the short term, as you've seen at the moment, demand is going up again. You know, we're still having a recovery of oil, but the real question is that other industries will take over, other alternatives. So gas, for example, will take over some of that. That still allows for a lot of growth in that industry. And generally, for me, it's not necessarily oil engineers, it's energy engineers. You know, this entire industry is something that will be around regardless of which technology or wins out in the long term.
Okay, and I just wanted to ask you a question about, there's a crisis in Egypt at the moment, and some economists have said that this may affect the oil industry. Would you agree with this?
From our point of view, as a private equity firm, we're long-term investors. So no, I don't. I believe the news cycles are really short at the moment, and obviously prices in terms of trading and futures are impacted on a daily basis. But for our asset seam, we've seen turnover rise by 43% so far this year. We did 56% last year. So the market is growing very strong, solely on the efficiency platform.
Okay, great. Bjorn, thank you for that, and thank you for joining us today.
Thank you very much for having me, Elaine.
And that's all we have time for now, but do check back later for further updates and interviews from the Dukascopy TV team. Bye for now.